Okay, we'll be able to start now. Hi, everyone. Good morning, good afternoon, good evening from wherever you're joining us from. My name is June Kangula. I am in charge of the pre-summit events and the awards at AESIS. For those ones who are joining us for the first time, AESIS is the Africa Early Stage Investor Summit. This year will be our 13th edition. We hold it at the end of the year as we open the Investor Week in Cape Town. And today, this is the second session of the virtual series, and we are going to talk about opportunities beyond the Big Four. And we have a great panel who will lead us through this discussion. And please feel free to share your insights in the chat as we go by. But before we continue, I would like to inform you that we have opened our early birds tickets. They only come once in a year, so that is 1 month, 1 month to before we now are able to launch our normal tickets. And with this, you'll be able to get a 20% discount. And please feel free to use the code. And we will be thrilled to have you in Cape Town to have to further this conversation and have more insightful conversation about the investment landscape in the continent and the opportunities that await us. And without further ado, I would love to welcome Abu, who will introduce our panel for today as he leads this great conversation. Abu, welcome.
June, thank you, and a very warm welcome to this exciting panel. Today, we're going to be discussing investing outside of the Big Four and what it takes to drive capital to some of these other markets. I think what we've seen on the African continent is that there's still a very big concentration of capital in the Big Four markets, these being Kenya, Nigeria, South Africa, and Egypt, but yet innovation is happening across the continent. So in today's discussion, we asked the important question, what is it going to take to get more investment into some of these underserved markets? And we've got a really insightful panel that we are joined with today. We've got Lucas, the principal from Renew Capital. Lucas, if I could just ask you to come online and just say a few words about yourself.
Hi, everyone. My name is Lucas Robinson. I'm ordinarily based in Nairobi. I'm catching you today from Canada. But it's a pleasure to be with you all. Renew Capital has invested in roughly 53 companies across the continent, many of which are outside the Big Four. In fact, a number of those Big Four we have never done a deal in. So that's kind of odd. So I'll look forward to talking about that today.
Thanks, Lucas. We've also got someone who I work with quite closely on a few different projects. Francis, the founder of EInnovate Ventures and co-founder of Serengeti Angels. Francis?
Hi, everyone. It's nice to be here and to be part of this very interesting topic. I'm sure not everyone will agree with what we're going to say, but we're going to say it either ways. I like what Lucas has said, and I'm a big fan of Renew Capital. So I lead the EInnovate Ventures. We are a venture factory, basically supporting early stage companies to find scalable models and also connect them to investment. We also do pre-seed rounds, being like the first venture to write checks to companies in these emerging markets, especially in Tanzania, through the Nest Fund. And also I'm also part of Serengeti Business Angel Network, where we are mobilizing local capital to invest in founders that we believe in here in Tanzania. Actually, I am sitting here in Mbeya, deep down in Tanzania, in one of the areas that potentially most people don't know. But incredible businesses are here, and I'm here coming to look at one of the companies. So interesting times, and looking forward to the conversation.
Thanks, Francis. And then lastly, we've got Sunga, the principal at Stratford Venture Partners and founder of Malawi Investment Angels.
Hi, everyone. Sunga Mkwezalamba, Malawi national, but I split time between Malawi and the U.S., currently calling from the U.S. I'm a lawyer by training, began my career at Baker McKenzie, which at the time was the world's largest and highest grossing law firm, doing a lot of large cross-border transactions, M&A, project finance. It then developed an sort of an appreciation for speed and getting things done. If you've been in some of these larger uh, project finance deals, they can take quite a few years. So then I moved and transitioned to Silicon Valley, where I spent a brief period doing early stage venture deals. That's how I got introduced to this space. Then became an investor myself, put together an outfit, Stratford Venture Partners, where we also did some deals on the continent, and then recently founded the Malawi Investment Angels, which is backed by the United Nations Development Program, and then also Victoria Ventures, who some of you all may be familiar with, are supporting the project, including some folks here. ABAN, VC for Africa, and AESIS have been wonderful partners. It's a new investment opportunity, and it's also outside of the big four. So I'm excited to talk about that and present that opportunity. Application period to join our first cohort ends this Friday. So if you're interested, please apply. We have local angels and then also investors in the diaspora are invited as well. So great opportunity to invest in an emerging market. And I'll share a link to the application and looking forward to contributing to this discussion.
Thanks, Sunga. As June mentioned, we do have the opportunity for you to participate in the in this particular discussion through the chat facility. I'll be keeping an eye on questions as they come through. We are going to be facilitating the session in themes, so there'll be topics, and you'll see these come through as we speak. And if there's a particular question on that theme, please do share it in the chat. And either myself or June will pick up on that question and then share it with the panelists. We're also hoping to have a few minutes at the end to circle back to the audience and then field any questions that may not have been answered during the session. There is quite a bit for us to get through, so let's get into it. And to begin with, the first segment is going to be on this concentration of capital and why it's still there. Lucas, I'm going to come to you. And just in terms of Renew Capital, you've invested in markets many international investors considered too early, too risky. What gives you at Renew Capital the confidence to invest in these emerging ecosystems when others are not?
Yeah, thanks, Abu. I think there's two things. One is that we typically have someone in each of the ecosystems that we invest in that is working for Renew Capital. So we don't rely on some kind of I don't know, general funnel that kind of pulls randomly. We really actively look to play a role in that ecosystem and really understand the ecosystem. And what that means, I guess, leads to the second point, which is that we tend to find that investors look at risk, and I know we're going to come to the topic of risk, later, but we tend to try to split up the topic of risk into different buckets. Like, what exactly is the risk? Because usually people are like, okay, before Nairobi, I used to live in Zimbabwe. And people were like, oh, Zimbabwe, I'm not touching that. And I was like, okay, well, let's talk about the risk, of Zimbabwe. So which particular risks are you worried about? Are you worried about flood risk? No. Okay, great. So let's take that one off the table. And most, by the end, they would identify 2 or 3 specific risks that they would be really worried about. And when you do it that way, you can usually mitigate 1 or 2 of those risks, right? And then you're left with okay, well, what's the risk that I'm left with? And it's well, that's actually a pretty manageable risk. Now, the deal may not still happen. It might be that you view that risk as really too difficult. But I would say those are the 2 things that we tend to do at Renew Capital that allow us to operate in countries that other investors shy away from.
I'm on mute. But just in terms of that investment committee dynamic. So this would obviously have gone into the makeup of the investment committee, but there must be a risk appetite within that committee to then invest in these emerging markets. How have you gone about setting that up, and what sort of culture have you embedded into your investment committee to make this happen?
All of us are on the investment committee are entrepreneurs ourselves, either presently or historically. And so, yeah, I think that kind of comes naturally to us, I guess you could say. We've also lived in these markets across Africa. So, the co-founders of Renew Capital, Matt and Laura, spent the last 15 years operating in Ethiopia, which, would certainly be in that list of markets where many investors shy away from. Adam, the other member of the IC, is also based in Ethiopia. Until recently, as I said, I was in Zimbabwe. So yeah, I guess those two factors combined with the fact of that our investment committee receives information from our investment analysts, and those are the ones that are actually on the ground in places like Zambia or Ghana, Rwanda, Uganda. So I think we really depend on those people to kind of bring us up-to-date information on those markets.
Yeah, I can imagine very helpful to have people in the market and understanding the local nuances to then feed that through to the investment committee. Sunga, moving on to you, you've worked across many African startup ecosystems and invested in hubs outside of the traditional markets. Do you believe the challenge is lack of investable companies, or are investors simply not looking in the right places?
That's a good question. I think the answer is maybe a hybrid or a different, the way that I look at it. I think from my perspective, the structures don't particularly work for the investors that are looking for early stage investment deals. I think you have different players in this space that are driven sometimes by like Western ideologies. I always remember, so I said I spent time in Silicon Valley. I actually worked for the law firm that created the safe note. And in a market like some of the markets on the continent, to me, I was always surprised that people were raising safe rounds, right? Because the assumption is that this person can then go and get equity at a later date at a fixed price. But what reality is that, right? The economics and how business works and finance and some of these markets work differently. So, I have experience like, from the Malawi as a use case where the secondary market to offtake like Series A investments or seed investments is just almost like nil. I know that Renew is looking at Malawi as well, but there are very few players in that space. So I think just the infrastructural system of how it works is kind of like is not as inviting to investors. And once we put together a package that makes sense, so I'm working with some other folks in how do you create a structure from a legal perspective that's investable, that's attractive, right? Like, do you put in some sort of royalties or warrants that make sense for the continent versus like the traditional, we're raising an equity round. So I know there was like a two-way go, and I kind of like came up with a hybrid response. But I think collectively, if we can help founders and the ecosystems, particularly outside of the traditional big four, because I think they've matured in a way that investors and founders speak the same language in those jurisdictions. I think there's an opportunity in emerging markets to do that as well. And I don't think it's a heavy lift, right? I think it's as simple as thinking about like, where do you incorporate businesses and how do you help them? And how do you work with the local governments and the players and stakeholders to say like, okay, these are the structures that need to work for investors to invest in this space. And here's how you can make it easy, right? Here are some tax incentives we can think about for investors. Here are some we call them, safe harbors in laws, which allow early stage founders to operate without some of the expenses that come with heavy, typically like compliance and reporting requirements. Like, how do we fix the ecosystem like that? But I do think the deals are there, right? In outside of the big four, we're seeing a ton of. You can go to a very simple innovation fair in Tanzania, in one of their major markets. You can go Zambia. You can go anywhere, and you can see some of the most profound business ideas, right? But is the structure for the investor to to make a quick decision there? And sometimes it's challenging, kind of really quick. Like Malawi right now, we're dealing with a forex issue. So even though they're great, bright ideas and you can invest, how do you take your money out? So we've got to work with stakeholders to say like, okay, we've got investors who are ready to deploy capital. They're investable companies, but the structure is broken because of the forex issue. How do we solve for that together? So there's a lot, but kind of like piece through the notes, and then I think there's an answer there.
Yeah, I think you and Lucas have both touched on some really exciting markets, and maybe just open it up to the panel as a whole. Which ecosystem or which market maybe excites you the most? Sunga, I'll start with you, then hand over to Lucas, and then Francis, if you could come in. And
Yeah,
you've mentioned Malawi a lot, so maybe
yeah.
not
I'm
excluding
I'm
Malawi.
biased. I'm biased when I say Malawi, and I don't know if I mentioned the Malawi Investment Angels application period ends this Friday, so please apply. Malawi Investment Angels. I think they're on LinkedIn. Other than Malawi, I really like Zambia. I think some of the folks here might be familiar with the Zambia Business Angels. I think due to proximity, I've interacted with them quite a bit. They're seeing some success. They're seeing a lot of great innovative tools in waste management, in energy. There's also mining opportunities there, for early stage companies can also take advantage of. Um, there are a lot of impact opportunities for those who are looking for pure impact plays. I also like the demographic. I think it represents what a lot of people are seeing in the continent, a very young, capable population that can support big ideas and support businesses. And then also, I think finally for Zambia, it's an English speaking country, where it's very surprisingly how well English is spoken throughout. But I think it just makes the environment for doing business much more easier. I guess I'm biased because I speak English, but I really like Zambia.
I think
Huge
our
fan.
audience agree with you. There's
Yeah,
some thumbs up.
yeah.
Lucas?
Yeah, I think it's I'm going to cheat on this one, Abu. I think it's little depends on your sector. Like if I was going to do mining, Zambia, like done. Like there's, it's such a yeah, it's a great opportunity. And there's so many others in Zambia too that I would do if I'm playing to the audience. But I often think like, if I'm going to do fintech, I might choose one, for example, Rwanda as a really clear, uh, like kind of licensing ecosystem that is just like, I know where I stand. I don't have to worry about certain issues necessarily coming up. And I just like, yeah, it's logical. Um, by contrast, if my product were kind of heavily youth focused or heavily, I don't know, connected to the French European market, then I might kind of choose the kind of either DRC or maybe, West Africa, of course, has the common currency angle on the French West Africa. So that, there's like so many, if you dig down a little bit, there's like lots of benefits country by country that you can take advantage of. Um, and Sunga's point about English is like the truth is like yeah, it's just so helpful. It's like sometimes uh, as investors we have to admit like we're pretty lazy on this stuff, and so spending extra to get like a French lawyer to like review the legal documents, sometimes that's just like a step beyond. It sounds so lazy to say that, but I confess that it sometimes is a barrier. So um, yeah, I I would add that to the list.
Yes, I can relate. I'm on a few WhatsApp groups where the language is not English, and then getting Google Translate to help you is just an extra step, which
Yeah,
is a
it's
hindrance.
an extra step, and it's like our general counsel is not going to rely on that for he's going to go to a French lawyer that's going to charge us like thousands of dollars an hour to deal with it. So when you're investing at a really early stage like us, I think that does become a barrier.
See a question coming through the chat. Let me just go to Francis first, then we can come back to that question.
Yeah, so for me, I think I won't say like it's a bias, but I think it's the opportunity. I am based out of Tanzania. Of course, I'm Nigerian, so um looking at like I will go with what Lucas has said. I depend on your fund strategy or what you're looking at. But for me, in terms of, trying to be in a place where over time it could be like the next investment hub. You want to really kind of find success in your portfolio. Tanzania is the place you want to be because of the opportunity, how it's been connected across the southern part and the eastern part of the continent. So it's easier to kind of build. And this is also what I wanted to kind of talk about in terms of like where when they talk about emerging markets and founders that it's so high risk, there's no good deal flow there. You're looking at Tanzania as Tanzania, but you are not looking at Tanzania as an opportunity to really build across the southern part of the continent or eastern part of the continent. We've seen startups now from Tanzania getting PSP, payment license in Rwanda, going to Kenya. So they're able to actually build from the emerging market to the big four. So that shows like there's a huge opportunity there. Market opportunity, growing economy, Tanzania. But other parts, when I'm looking at something like is smooth, policy-wise, open market, I think I'll also go with Lucas. Rwanda is also another incredible place that I would like to also venture into.
And just then, and maybe to the panel as a whole, there was a question coming through just on Burkina Faso and Senegal. Anyone made any investments into either of these markets or have any insights?
We've looked at Senegal a few times, Abu, and would really like to do a deal there, but we haven't yet. Burkina Faso, I was just typing a reply to this. It's possible I am guilty of doing exactly what I warned against doing by generalizing without, being there. But I have to say, civic space, I would have a lot of concerns about the ban on political parties, like silencing dissent. Like, I know it's not alone in this regard, but it strikes me as a pretty tough spot to do business. So Renew Capital has not looked at it recently. Yeah, but hey, I'm open to being told that my information is I don't know, out of date, and we should look at it again.
Big continent, and
Exactly.
each market is unique, and even within each market, there are lots of
That's
nuances.
right. Yeah.
Not Burkina Faso, but Senegal. There's a interesting project that I'm working on, solar powered irrigation farming. But I would maybe say it's I don't know size wise what people are looking for. I would say it's, but I'm happy to talk offline if folks want to shoot me a message. I think it's not a heavy project. I think it's between 20 and 30. So happy to talk about that. But that's what I've current project in Senegal that is showing some promise is a solar irrigation farming project.
There's an offer to connect with the Canadian Chamber of Commerce in Burkina Faso, if anyone wants to pick that up. There was another question, and I'm going to paraphrase this question just in terms of the different markets. How do you look at them? How do you see them differently? Is it things like exits? Is it the network effects, policy? What factors do you assess when looking at these different markets?
All of it helps. I'll say my 2 cents. I mean, probably nothing helps more than exits, right? Like if, like that starts to just create so much buzz. Even if it's one that we haven't been a part of, but if others are exiting, then, you know, as Sunga said, like if some of those fundamentals aren't there, then, that yeah, that becomes a challenge, and exits kind of point to the fact that like some of those have become overcome. Um, Actually, we often, Francis knows this better than me, but in Tanzania, we've been following their, like many African countries now have like something equivalent to a startup act or, like some bill that is designed to support startups. And we follow that quite closely, because it often does help, actually. So, I think, yeah. And we also follow, for what it's worth, like, in the Kenyan context, when they announce things one year and then do something totally counter to that policy the year after or 2 or 3 years after, that's like a massive red flag, right? Because so, for example, Kenya passed a law suggesting that certain industries would be tax exempt, and then now they're looking at like, oh, that, you know, we need some money, so we're gonna like slap some taxes on those industries that we said were gonna be exempt from import taxes. So that's, without wishing to sound like the hard-nosed investor, like that makes it pretty tough when your portfolio company makes a big play and puts in a factory to kind of take advantage of a tax situation, and then the government changes their mind on that. Every government's entitled to change their mind, but if you want investors to kind of look positively on that ecosystem, those kinds of shifts in policy do become uh, worrisome.
Yeah,
There's a
so
few
maybe I
more
can,
questions. Francis, go ahead.
yeah, maybe I just kind of add a little bit, just to deepen what Lucas said. I think for me, it's a lot about looking at the historic policy, design, implementation, and how quick it can change, especially when it comes to investments, moving money around, and even at sector level, because you might see a government like, we didn't pay attention to the sector right now, it's booming, we want to hold it. And probably you've done a lot of investment in that place, then it becomes, a chase. So I think for me, looking at stability, especially from the government perspective, the business climate is also key. So it's just looking at the past 5 years, past 10 years, intergovernment changes, what has been stable, and how is that affecting the economy or the business, especially when it comes to the startup and SMEs. So for me, it's at that play, it's very critical.
Francis, I'd like to stay with you and maybe just spend a bit of time on the few international investors in the audience, and maybe that you are doing things differently, or there are things that you feel these international investors can learn from. Can you maybe just give them some tips and pointers, and maybe some of the misconceptions that may be relevant to some of these underserved ecosystems?
Yes. Yeah, so two points. I'll start with one. One of them is that when you come into ecosystem like where we work from, due diligence is not just about looking at the notes. I think due diligence has a lot to do with relationship building and observations. Because you are in a market where data is not it's not flowing, it's not smooth. Um, Documents aren't enough to really kind of identify any red flag or if there's opportunity for this business to grow. So it's I've seen like international investors coming to like Tanzania, and meet a founder, get the hype, write the check, and I like, okay. And high valuation, I like, okay, what's going on? I know this founder, I've known this, you can't hide so much, right? So when you are trying to invest in a market like Tanzania or emerging market, I think for investors, international investors, it should go beyond reviewing documents and making decision around that. I think it has to also go into like asking question on ground, We have like other people. Of course, we used to have Renew Capital. We have ARV right now. We have Arioba. Have other hubs that are doing incredible work here. I think due diligence goes beyond just that 1 day, 2 days of having those calls. It requires a lot of relationship building, understanding, and that's when you can be able to make a better decision on how you want to invest. I think that's one. Another part is that we have all this kind of the way of generalizing that there is uh, poor quality deal flow. I wouldn't say it's a poor quality deal flow. I would say it's low deal flow, quality deal flow. Um, it's like you come to Dar es Salaam and like, and I didn't see anything. There's nothing going on. But it might not be a lot, but there could be very good quality ones and they're doing well. So you want to kind of spend a bit more time in the ecosystem and also be able to see who is doing what, how are they building the fundamentals are really important. How did they start? How are they growing? Are they making revenue for us? We don't just judge on the hypes. We would judge also in terms of business viability. Are they actually generating revenue? Are they paying for it? So that's some of the things that you want to kind of use to judge if you want to invest in a market like Tanzania as well. So those are some of the things I could advise international investors coming to the continent and into Tanzania, but also with kind of work that we've been doing, you now have like a very easy, low, soft landing ground to really know what's going on. And I would have talked about later, where you have like opportunity for people de-risking companies, like the work we are doing with VC4A on that developed ventures with DG. So you could see like maybe over 30, 40 companies have passed through this kind of program. That's the place to start looking for deal flow. And you can actually get like concrete, honest feedback from investors that have invested in that. And that can actually help you in your process of making decisions.
Deal flow is actually the next topic that we're going to cycle across to. Maybe Sunga, I'll begin with you, and specifically founders within this deal flow process. Can you talk me through the characteristics that you often find in founders that stand out in these underserved markets?
So for me, I'll be very brief. I think I really like founders who can explain the issue in an informal but very practical manner, and then how they solve it. So, for example, going back to Malawi, Malawi, lending is an issue, right? Access to credit is an issue, and you'll see that in most places outside of the big four and the countries we're talking about, right? So then, how do you solve for that? There are a lot of founders who are doing innovative solutions that are around community lending, right? Building trust systems that are outside of the traditional bank. But those lending systems that are sort of very informal are doing quite well. And it also creates an opportunity in like the microfinance sector to kind of offtake some of that. So then you've got this also informal sort of like VC like linear exit market, right? That you can talk about, but it's very different. So it's very opaque, very abstract. But I really like founders that can crystallize that and explain. And it's sort of, for me personally, sometimes it's a little off-putting when founders kind of try to explain the rules and how they operate per the rules. And the reason why sometimes it goes to Lucas's point is when the rules aren't really enforced as they are, right? And that's just the reality of the space that we're in and the risk that we're in is we see the rules and a lot of times they're enforced differently. But founders who know that and they know how to operate in that informal space, and it's not in a way that breaks the rules, but says like, okay, this is how we do things in the gray area. I'm truly attracted to that. And then there are the obvious factors that you look at, education, signals that tell you that they have an expertise in an area. But I guess that's the short of it. It's just, the
I
informal.
take it there are a few founders in the room as well. So maybe, you've touched on this. Are there any sort of characteristics that you would advise against in terms of founder engagements? What is there one thing that you've come across where founders maybe a bit too arrogant, a bit too brassy in terms of his explanation that you've struggled to connect with?
Yeah, no, that's interesting because yesterday I was, I'm a lawyer, so I write a lot. I was just very frustrated when I kept seeing things that were long. So it's like there used to be a time where the rule was like keep it under 3 paragraphs. And my mentor used to say, if someone is spending more than a paragraph on something, then they don't know what they're talking about. I think that's the same for founders that I interact with. When I see them just over explaining the product, over explaining the issue, and over explaining the upside, I get very weary and I'm saying that this person doesn't know what they're talking about. So I would say like very brief in what the issue is, the problem, and how you're solving for it. If there's an opportunity to present what your ask is, go ahead. I do think that I'm seeing a common trend where like cold outreaches, cold pitches that come into inboxes or even intake forms on VC firms or angel investment organizations or networks websites is sort of like falling flat. I think people are looking for more relationships, introductions, more in-person, personable experiences. So for the founders in the room, if you can attend a networking event that's hosted by an investment firm and show your face, that would be great. Don't always lead with your pitch. Try to develop a relationship. I do like founders that I consistently see at some of these events because I know that they're downloading data and they're applying it. And I know that they want to speak the same language that investors speak. So I would make that suggestion for the founders in the audience.
Great. Lucas, moving over to you on the same theme of deal flow. You work with a lot of local partners, and you talked earlier about the local team on the ground. Can you just talk us through some of the other stakeholders in the ecosystem that you tend to engage in the deal flow process?
Yeah, I mean, Sunga mentioned a couple, like the Zambia Business Angel Network and the Malawi Angels, like any kind of local network like that that is putting its stamp of approval, or even like nobody's going to be like, we certify this is amazing, but by what I mean by stamp of approval is like, they're kind of saying with us, even a small check, like even if it's $5,000, um, which I know is not that small for some founders, but in the grand scheme of venture capital, that's relatively small. That signals to us that there's like local interest or support for the product or for the business, and that's usually a very good sign. So Renew Capital is often the first institutional investor on the cap table, but it's rare that we are the first investor as a whole on a cap table. So local angel, even just another business that is sort of saying like, we are so excited about this new business that we are going to put a little bit of money into it. We view that as a good sign. Um, that'd be the main one that I would point to. Of course, attending conferences and showing up for happy hours and things like that is important, because that's where you'll meet like our team in some ways, right? Like if you don't do those things, and I know for some people, myself as an introvert, I like sometimes the thought of having to go out again on a Tuesday night, I'm like, oh God, it's the last thing I want to do. But you have to. And you got to get out there and make a plan to meet some folks to make sure they know what you're building. Sometimes I think as entrepreneurs, or we kind of nerd out on the like the product building side of things, right? But we forget that like if you don't sell this thing, it's not worth anything. It's very rare that you can just like plant your product out in the world and like everybody's just going to snap it up without any sales effort whatsoever.
I'll be in Nairobi in early October, and maybe we can find a happy hour to attend together.
That'd be great. I would welcome that. And the thing is, there are no shortage of them in Nairobi, right? Like, we're talking about, things that differentiate the big four from other sectors. And it's true that if you're in, I don't know, if you're in Kampala, there are fewer of these happy hour events every week than there are in Nairobi. It's just like, but you should consider yourselves blessed for that fact, and therefore you only have to go to one or two a week and feel like you're really out there and going to all of them. Nairobi, if you went to every one of them, you would never make it home.
Francis, there's a few questions in the chat, specifically on Tanzania. So maybe we could, it's also in and around this theme of deal flow and investment readiness. In terms of what you look for in a business, what are the key aspects of a business that you assess? And is there anything specifically in the Tanzania market that you think is currently missing?
Yes, so maybe I can start with in terms of what we look at in a market like Tanzania. I think what really kind of let us know that you are doing something is traction. Except you are a second time founder, you've got exit. But if maybe you're trying to build like in a market like Tanzania, what kind of validates what your business model or what trying to build is the uptake? How are people using your product? How many are coming back to repay? I mean to pay to continue to use the product, and that's one of the first things I want to look at. Maybe if you've been doing this for 6 months or 1 year, want to look at, what are the returning customers, how is your customer acquisition going? Then we also want to look at the team and also the governance. One of the biggest issues that we find in a market like ours is that you see maybe the founder does everything. Founder is also the signatory. Founder does all the decisions. So this also kind of sends the wrong signal in terms of governance and also resource management. Other thing that we're also looking at is definitely the market opportunity. Is it viable? Is it big enough? Or do you have, doing just the same number, just Dar es Salaam, and that's it? There's opportunity for it to really, become something regional at a level. So these are the very basic things that we want to look at in the initial talk and see if there is opportunity for us to kind of deep in and have more conversations. But for me personally, revenue is key first, just to validate what you are building. What's the other question?
Yeah, specifically Tanzania, if there's anything that you feel the market itself is missing amongst the things that you look for in a business.
Yeah, so basically in Tanzania, I think one thing that we are missing as a market is I won't say more like a traditional VC. We are in a place where the opportunity is there, but it's in a raw form. So it requires a blend of capital and proper technical assistance. That way you can actually be able to build what really makes sense and what can scale. So the capital that actually come to Tanzania at the moment, most of the time might not fit because either if it's a debt fund or something is looking for EBITDA positive, or if it's equity, then it's looking like, who has invested, what's the valuation going to look like, as the case may be. I just feel like, we are still at a bit of that raw farm, but the opportunity is there. It requires just more than capital to get us to a place where we can really be, a very good investment hub. We require also a capital that comes with technical assistance and support for the founders. If you look at, I'm saying this from experience, if you look at most of the founders that actually received money plus technical assistance ongoing, they've been able to, have seen incremental growth in their business and also attracted follow-on investment. That shows the importance of, the technical assistance that comes with it. So that aspect is there. Like people like Develop Ventures doing it. Some other, of course, there's also catalyst, like Daracha also does similar thing. We need more of that to be able to, bring out, improve the quality of the business and opportunity, and that will actually kind of get Tanzania up off the hook. And we are doing well. It's showing, I think, from the Africa the Big Deal report, you see like for first half of 2026, Tanzania is like the fifth in Africa, 53 million or so. That shows like, it's a market that, every investor here should be looking at, and you can come and talk to me.
That's a great sales pitch. Thanks, Francis. I just want to now spend a bit of time on risk and maybe open it up to the panel as a whole. Do you think of risk differently to maybe some of the other more traditional investors? And if so, does that then filter through to your portfolio construction, for example? Lucas, maybe I begin with you and then come through to Sunga and Francis.
Yeah. So we've, how can I sort of have two answers again to this one, Abu. The first is reflecting historically, which is to say that, and it really relates to my first point, which is that I think we see risk as, yes, we need to avoid geographic concentration, and we probably have more deals in Kenya right now than perhaps like a pure like straight risk profile would logically tell us like we should have. But we generally take the view that over time that self-corrects in some ways. Like we don't need to I don't know, like we don't really need to go out of our way to like adjust for that on a week-to-week basis. Um, but um, But lately, we have been doing a lot more debt and looking at doing a lot more debt. And when you do debt, you approach that like currency risk in particular quite a bit differently than you do when doing like, a safe note as Sunga was talking about. I didn't know that about you and the history of the safe note, by the way, Sunga. That's cool. That's a cool fact. Um, but so equity deals like you can I don't know, like I guess we've taken the view that you can be a bit patient about like if you know you're gonna get your money out of the country eventually, but you might have to wait 6 months, has traditionally been the case in Ethiopia, then like maybe you're gonna tolerate that. But if you're waiting on monthly debt repayments, um, and uh, then and you've got all that debt coming out of one country whose currency is like busy like falling off a cliff or something like that, then you start to really think differently about the risk that you're taking on. So actually, I would say the way we answer that question as an investor has changed over the last year as we take on more and more debt, or as we lend more and more. Um, we're starting to be a bit shy around too much country concentration.
Mm-hmm.
So yeah, that's one really like top of mind component that I would flag.
Yeah, a very important point, and actually, blended finance is something that's been commented on in the chat as well. So it's
Yeah,
becoming more and more topical.
yeah, and we need to start doing things like, exchange rate guarantees and all those kind of clever mechanisms that, frankly, as Renew Capital, we haven't had to worry about as much until recently. So we'll get there.
Mm-hmm. Sunga?
Sorry, the frame of the question is how do we
Just the
evaluate?
risk. Yeah, risk and do you think of risk differently to a traditional investor?
Yeah, so I think now I'm becoming because I came from, Silicon Valley, had a pure like VC focus, returns, very aggressive, don't look at anything else that doesn't beat what's standard. And now that sort of provided hurdles to investing in some of these emerging markets outside of the big four, right? Like traditionally, like I could see what a fintech play looks like in Nigeria because it became so mature that it mirrored what I was seeing out of Silicon Valley. The same goes for, even though I don't know if we're how strongly we feel about what we're seeing out of Nairobi, but I love what I see out of Nairobi and Kenya from tech. I also love what I see coming out of Ethiopia. I don't think we've spoken about it, or it isn't talked about enough. Sort of how emerging Ethiopia is and becoming very investable, and there's like Yango and all the amazing things that are coming out of there. But anyway, the short of it is that risk existed when anything didn't look like what it was traditionally to me. But now I'm having more of an impact lens. And I think for the investors in this space, when you see a deal that may not produce returns, the question, because of the risk, the question and is like, can I present this to my investors or someone in my network as an impact play? So it still sits within the groupings of like, I can make the investment, but because of the risk, then you just shift what you call it and you then consider it maybe a pure impact play, and somehow you're helping the ecosystem because you're, supporting water dams, et cetera, and there likely may not be a return. But just kind of just, I think overview, like everyone thinks about risk different. It's so hard to quantify. It's so hard to describe like what is an investable risk in the continent sense, political risk. We talked about currency. Like we're all sitting on some part of risk. It's like, what's your risk appetite? And I'm one of those people who has a huge appetite for risk. I think also this group as well, given we're talking about areas outside of the big four. Um, but yeah, I think the short of it is, I think the way that I think about risk is different, and mainly I just flip the script and like how you narrate what the investment is, and you can still move forward, but you just have to have a different lens because if you're thinking returns, profits for your investors, you're going to have a really hard time in some of these markets. But some of your investors may be happy if there's an impact play. I'm helping a family office out of Utah that wants to get into solar farming, right? And they've got a ton of money that's coming from the church, but for them, it's a pure impact. So we talk about risks differently.
Yeah, that's an interesting angle we actually haven't touched on just yet, impact. Francis, do you have anything to add to the risk discussion?
Yeah, I think Lucas has already mentioned that about risk. Like where we sit, risk is everything. You have to just kind of choose what risk you want to take, right? It could be political, it could be currency. You can equity exit is a challenge. Liquidity when it comes to debt, you have to play with currency exchange. We're actually looking at a company currently, and the investor is looking at, okay, I want to, it has to be like a dollar denominated debt, and the founder is saying it has to be local currency. So there is this challenge that comes with all of these instruments. For me, I also how we are also looking at investing in a market like Tanzania is actually having something more blended. There are a lot of impact funds that go for like grants. I think those ones can really be converted into a de-risking facility that can allow even commercial investors to come in. So we talked about in terms of like what Luca was talking about, guarantees for exchange volatility or subsidies or even first loss for angels. I think these are some important risk measures that impact funds or normal grants can really kind of change into and start helping commercial capitals to come in more ecosystem where we perceive higher risk. So that's where we start now thinking about how do commercial investors start meeting in line with impact funds and say, okay, we can work together, not just on impact level, but also at economic scale. We bring this together and see how we move more money into the ecosystem.
All right, thanks, Francis. We've got a couple of minutes left, and maybe taking the lens and looking forward into the panel as a whole. If there's a particular message you'd like to leave the audience with, just in this final piece, and maybe just open it up to the panel as a whole, and whoever wants to go first can just jump in.
I don't know if I already said it. Malawi is an emerging economy, lots of promise, lots of opportunity. I noted there's another angel group, 265 Business Angels from Malawi is also present. So we got a growing ecosystem that also lends towards what Renew Capital talked about. And as mentioned, the application period for the Malawi Investment Angels ends this Friday. I sent a link in the chat. Please apply and support. We have a lot of cool things, networking, training that's going to be available. So I'm going to close with a pitch for an emerging market opportunity for the audience.
Excellent. Thanks, Sunga. You mentioned the chat. There were a couple of questions we didn't get to. One of the questions was just in terms of getting in touch with Renew Capital and also EInnovate/Serengeti. If I could invite the panelists, if you are not speaking, to maybe just respond to some of the questions that we did not get to via the chat. Francis, you've unmuted.
About the questions or my final piece?
No, your final piece.
Yeah, so for my final piece, of course, one of our biggest role we're trying to do since we started the Angel Network was to really de-risk local companies and actually give opportunity for investors to come in. And that's our mandate, that's what we continue to do. And we are very open to collaborating in terms of sharing deals, also inviting other angel networks that want to explore opportunities in Tanzania. We can be able to collaborate. And also other investors that want to look at where we've invested. We are very happy to share these opportunities with you. And what you get is that we on ground, we provide on-ground support for you and help and being that partner up to be able to support these companies. And for other investors that are looking for deal flows, you don't really have to come to Tanzania anymore. We're already building a whole deal flow infrastructure that automatically leverages our AI analysts to get you deals that are already vetted from Tanzania. So if you are looking for deals from Tanzania, you can also reach out and we can be able to onboard you into this infrastructure. All you have to do is just check your email when a deal is added to your pipeline, you will see it, and that gives you more visibility on what's happening, and you can also be able to syndicate within the platform. So we are emerging and we're growing, and we know that one day we are going to also be at that level where the risk is not perceived to be too high, and we're able to get more investors into the ecosystem.
I see Burkina Faso is trending in the chat. That's good to see. But Lucas, maybe hand over to you to share your
that
comments.
is great to see, and I'll look. I love when I learn things in these sessions, and I've definitely been enticed to have another look at Burkina Faso. So well done, Serene, or Serene Marie, I think it is. So thank you. I guess my closing thought is probably too grand of a title for it, but my view is that generally speaking, deals in the kind or outside the big four are harder to surface. They're harder to find in many ways because they don't just drop in your lap the way they do if you're at a drinks party in Nairobi or passing through Lagos or something like that. Like you really gotta get out there and find the diamonds in the rough. But our view as a firm is that work is worth it, and that the returns to be had are there. The impact to Sunga's point is there. The entrepreneurship skills and background is there. The risks can be mitigated in many cases, not all, but in many cases. And so, yeah, we're excited about that opportunity and are looking to keep doing it straight across the continent. We're in 11 countries now, as where the headquarters of those companies are operating. But if you look at where those countries have expanded to, we're in 34 different countries across the continent. So we are massively proud of that fact, and I think it's just growing every day. So, well, every day, maybe not every day, but certainly every month.
2/3 of the continent covered now, so that's really good going. Congratulations.
Thanks.
And it is a very exciting topic, and I'd like to thank our panelists for their insights this evening, and to the audience for staying with us and for your questions and engagement. I think it's been one of the most engaging panels that I've had the honor of facilitating. So thanks to all for your support and engagement. And once again, thanks to the AESIS team for pulling all of this together. And then all roads do lead to Cape Town. So hopefully we do catch up with all of you at the end of November in Cape Town. And with that, I'll bring things to a close and look forward to seeing you all soon.
Thanks, Abu.
Thanks.
Thanks, everyone.
Thanks, everyone.
Thank you, Abu.